Hey guys, welcome back to another video. In this video, we are going to go over why the 5-minute time frame is the best time frame to trade if you are trading one time frame only. Obviously, it has to be said that top-down analysis is the best way to go about it, so therefore you would want to be trading multiple time frames. But if for whatever reason you are only able to trade one time frame, then I'd highly recommend trading the 5-minute time frame. Just before we get on with this video, I have placed a key tip towards the end of the video, so make sure you watch the whole video from beginning to end and ensure you don't miss out on the key tip when it comes to trading the 5-minute time frame. So essentially, I have come up with 3 reasons why the 5-minute time frame is the best time frame to trade. Reason number 1, structure that you can actually trust. Reason number 2, confirmation entries on higher time frame order blocks. And reason number 3, the 5-minute time frame allows you to see a whole day's worth of price action and the advantages of this. The 5-minute time frame is traded by many. I particularly like it as it provides a lower time frame that I feel I can trust, as well as it not being a too low of a time frame where the price action is simply market noise. As we can see from this example over here, price begins to break down. We start to get breaks of structure, and this is on the 5-minute time frame. Now, the reason why at the 5-minute time frame is because it's not too low of a time frame where price is simply market noise or we get loads of liquidity grabs, but it's the right time frame where we can start to begin to trust the breaks of structure in a certain direction. In this example, obviously, we can see price is breaking down to the downside, and if I continue to draw on breaks of structure, we can see that price starts to break down, and then we get a return, and then we get a nice sell-off. Now, this was a trade opportunity from today, and obviously we have hindsight in play, but I guarantee you, go back, backtest breaks of structures on the 5-minute time frame, and you won't be disappointed with the results you find. Reason number 2, confirmation entries on higher time frame order blocks. Now, when it comes to trading higher time frame order blocks, one type of entry is a confirmation entry. As we can see in this example, prices come into a higher time frame POI. Now, we start to pull away, and that's the sort of reaction we expect once price enters a POI. We want a sort of rejection. We get this in this case, and price starts to move to the downside. Now we're looking for structural confirmations. Dropping down to the 5-minute time frame at this point, we can see we start to get some rejections. Now, what we're looking for again is structural confirmations. So here's one breakdown, and then we get a second one. So now we have a lot of confidence behind why we should take this trade. So if I begin to highlight a supply area, which I can highlight with this one here, we know we can take a short opportunity. Obviously, with this trade, well, let's go from here. From this trade, we know that the timing is not exactly right, but I just want to show you that even with confirmation entries, we can take trades from areas even when the timing is not exactly the right time. And as we can see, we get the reversal, let's say up to here, that we wanted. And obviously, this is a very nice example of why confirmations make sense, because once we get confirmations in terms of structure, price should respect that structure and continue in that direction. Now, the third reason why I like the 5-minute time frame, and for this example, I need to essentially zoom out. Well, not exactly zoom out, but just show you what I mean by this. And that is, on the 5-minute time frame, we get a almost perfect view of a day's worth of price action, as we can see from my screen at the moment. I can see from Asian session to Asian session. And why that's important is because it shows me an entire day's worth of price action, which I can begin to understand what price did previously in the previous day and what price is likely to do going forward. Comparing this to other time frames, obviously when we go up a time frame, we start to get more and more days worth of data, but on the 5-minute time frame, we get a whole day's worth of data, which allows us to see where price has been previously. As we can see over here, you know, we've made a higher high, and we can, from here coming into this day, we know we can expect a higher low to be put in place. And as you can see, that's what happened at this point before we then went on and made a higher high again. So obviously we have a bit more of a zoomed out approach with smaller candles that we can't really see as well as we would when we zoom in, but it allows us to look at the bigger picture and the smaller picture at the same time. Okay, so now it's time for your key tip. If you've made it this far in the video, give yourself a clap on the back, because you've earned yourself a key tip that I've learned from my year worth of backtesting when it comes to smart money concepts trading. So when trading SMC, you will notice you can refine your entry through order blocks down to any time frame that you want to. But over refinement is a big problem. A lot of people suffer from over refinement, and it causes them to lose out on many trades. Since I've gone through months and probably even years worth of backtesting data, I've come to the conclusion that the 5-minute order block tends to be the best one to take an entry from because it is very well respected. When it comes to over refinement, you will rarely get missed on a 5-minute order block. The best way to take advantage of a 5-minute order block is to start off with a higher time frame and then work your way down to the 5-minute time frame and then plan your execution from there. As a very quick example, let's have a look at this trade here. So we want to refine our entry on this trade. So let's start off with the 1 hour time frame. So what I'm going to do is I'm going to highlight this entire area here as our demand zone. Now if I refine it on the 1 hour time frame to this red candle, we can see obviously we refined it better. Dropping down to the 30-minute time frame, let's continue refining. We can see it will drop down to this area here, or this candle there. Then on the 15-minute time frame, we can refine it a little further to that candle there. And finally on the 5-minute time frame, for the best risk to reward, we can see we can refine this a lot further to this candlestick over here. Now obviously a lot of people will say that's over refinement, but from my backtesting and as a key tip to all of you guys, you know that the 5-minute order block tends to get respected very well, and as you can see it gets respected very nicely. Obviously this means your risk reward will be very nice and you can easily get and achieve a 1 to 5 or even a 1 to 10 plus very quickly. And I'm afraid that's it for today's video. I hope you've enjoyed it. Make sure to subscribe, give this video a like, follow me on my socials. All the links are in the description below. I'll see you in the next video.